It's a pleasure or honor to be standing here today. It's my first time to ever speak at an economic association conference. So it is, how can I call it, a home organization to economic minds of Namibia. So we really appreciate the efforts that they're doing, and we've witnessed how they've grown significantly. If I can say it that way, that they've really kept, or how can I say, that we maintain that mandate of preaching the economic gospel. So there is nothing at the moment that is striking the balance, or how can I say, the interest or the optimism about someone's survival, like economic prosperity. That is why we have seen a lot of neo-colonial ambitions that countries have tried to give us the narrative about political, stability and so on. And they cannot take us anywhere. Only thing that they breed is more conflict and more conflict and conflict. Because any ideology that is outside the premise of someone's survival, basically is a waste of time. So that is why we need a generation that is centered around that hunger to understand what is happening in the economic sphere of the country. So we urge you guys more, read up more, research more, develop your mindset a little bit more in that space of economic development. So myself is Rodney Hoaeb. I was a former trade researcher in the Trade Forum. Also partook in Namibia's trade negotiations for SADC, and then established myself as a consultant, primarily working with up and new coming factories or industries. So my focus on non-banking industry will not continue or be finalized without touching on the banking industry or the banking sector. In essence, Namibia is a very much not yet fully matured non-bank sector. We're talking about a sector that is, to us, most of our economic sphere viewed as a not a very broad segment of economic activity area, apart from venture capital companies. And we know that NAFISA also, in terms of implementing the policy that can take us to that next level, for example, of collective investments, digital investments, all that, the bigger, broader financial space is not yet evolving at a very fast pace. Or how can I say, when we have witnessed our first IPO this year for a public entity, what was the delay in something like that happening? So that only 30 years after independence, we are opening our eyes to become partakers of a stock listed company in the stock exchange. So we have to literally go back in history and say, where did it go wrong? That it takes time, that most people only discover, even the word hedge funds, they only hear these words for the first time after the age of 35. The first time I heard about the word equity, I was already probably 28 years old. The first time I heard the word about private-public partnership, the policy came when I was 35 years old. And now I'm 41 years old, and now we have a sovereign wealth fund. So you imagine, compared to someone who's grown up in Norway, where sovereign wealth fund is basically their livelihood. They grow up knowing and understanding how impactful that our policies in the country. So we need to literally push these policies quickly as much as possible, so that we have a stable guarantee about the next ushering of economic transformers that are coming after us. So we need to implement levels of deeper economic studies. And mind you, I graduated from economics from the University of Namibia. And after graduating, I had no idea, no understanding of how an equity market works. I had no understanding how a derivatives market works. I had no understanding about how a proper research is conducted outside the world of probabilities and hypotheses. So very basically what I'm saying, all these new teachings and learnings only come from your own anticipation about it. So the types of non-banking sectors, which is the core topic that I have to revert back to, we're talking about financial service providers, equity funds, collective investments, market brokering services, lending companies, venture capital funds. We see the pioneers like the young Yesaya Hanwashike, who are trying to push venture capital fund presence in Namibia. They're really trying the best they can to help small businesses to gain foot. financial sector. As we all know, that most of them are being monitored and checked under NBFS. So basically, if we look at, I'll also comment on the economic participation of non-banking financial, which is not really a big thing at the moment. As I mentioned, that it is still something that is being pushed into the industry, because what am I saying about economic participation is about when we identify that SMEs play probably 80% of the upstream economic participation in the country. And when we know that at least 50% or 30% pool of SMEs are tied to some type of a non-financial bank sector, then we know that we are on the right train to make an impactful contribution to the economy, which in this case is not really much, because when businesses that are bootstrapping accumulate funds, do we know that these funds go to salaries, or do they go to covering the self-interest? When we actually realize that most of the gaps of SMEs are that they struggle to make any means of attaining fixed-term contracts, long-term business security, or even just security to carry out a supply contract. And until we fulfill that gap, then we will know how and what are the real impacts of the non-bank financial sector. Basically, everybody want to outgrow the stage of them depending on the non-bank financial sector for small businesses, whereas they want the banking sector to help them to sustain themselves on a daily or monthly basis. And when we close that gap between banking and non-bank, then for sure we will have a positive move forward. If I look at the chart in front of me, is the GDP percentage change from 2014 to 2020. So I have a screen in front of me, so I can't tell you what I don't want to be like a soldier on the stage. I want to twist my neck a little bit, but I have to speak in the mic. Is the mic open? It's gone, but I cannot on social media. So I want to move around freely. I don't like to be like a soldier. I'm not a soldier. GDP change, as we can see, it looks like a little bit wavy chart if you may observe on the presentation. Basically, let's not use this as a way of, I know I did a previous research before, which was focusing on the type of regime shifts and how economic policy is shifting. But you can also do that in the back of your mind, but also with a bit of caution, because we're not making this a political statement. But if you look at it, 2014 to 2015, the economy was doing quite well. We all know it was a boom. Let me say the booming imports. The most important thing what we capture nowadays, vessels being serviced. So that is playing a very big role. It brings a lot of revenue because they're taxed in US dollars. Secondly, the diamond industry that is making diamond drafts, diamond sales, also bringing a huge revenue to Namibia. And that is basically shifting or pushing up the GDP gains a little bit. And then also, most importantly, that we should capture is when we have new discovery of mines, new development projects, infrastructure projects. Either they need on the budget or they bring GDP contribution. So we had B2 gold in 2012, significant change in GDP. The gold exports in 2013 was quite very good, very high, strong market. The GDP was always pushing up to 4%, 5% rate per average. And then we came in the year 2015, when we actually started experiencing challenges because of our huge deficit in the budget. So by then the minister was trying to shape it around austerity measures and so on, but the public wage bill was already at a boom stage. So why am I bringing up the economic discussion when we're talking about this? Because if we have stagnant growth in the economy, there's a suppression that takes place in the sector, at the sector of state, which is the primary sector, the secondary sector, and the tertiary sector. So mind you, the GDP is nothing if these sectors don't grow. And why am I zooming specifically into these sectors? I think venture capital should make an impactful contribution to GDP at the secondary stage. That is where manufacturing is. If we only have manufacturing output or contribution to GDP of 26%, then we're not manufacturing enough. Countries like South Africa, one country, Gauteng province manufacturing to GDP is already way over even what we get from supply receipts. So that is basically where we should check and say, what can we do? And mind you, Namibia was once a province of South Africa. But compared to Namibia, Imagine if you could sell porridge from your store. Not a big company. Imagine if you could do it. Imagine if you could sell, what is the basic need in Namibia? Imagine if you could sell sugar produced in your backyard to the mainstream economy. Imagine if you could sell beef. Okay, we do have a significant step towards beef. But imagine if you were controlling the basis of someone's everyday needs. That is where the basis of economic stability comes in. Where funding the SMEs in places where even the risks are very high. So then it means we would have been self-sustainable as an economy. If you look at once again the chart, there is a kind of a snake, but this snake's head dips down a little bit if you look at the year 2020, 2019. So mind you, in 2018, the tertiary industry, the primary industry was still high. The primary industry is the mining and the extraction services. It was a bit high between 2016 and 2018, which means it might have been a good time for commodities, your gold, like zinc, and I believe zinc was one of the big pushes for the economy by that time. But then what went off? So the secondary industry, manufacturing, went down in the year 2017, which means that is when we needed to fill the gap of funding a little bit more. I have a very interesting chart, so let me push through. If you look at the chart for the balance of payments, in the year, the chart just under the one that proves the weight, as you can see, in 2015, the economy was stable, but we didn't have enough foreign reserves. We didn't have enough money. So it means that all this time the economy was operating in a how can I say, in an inflationary manner. You're buzzing economy, you're buzzing growth, but meanwhile, there's just not money. We had less reserves, the net investments were down, net portfolio investments were down, net direct investments were down, all of them were in the minus. Only towards the year 2019 that we survived. How come? In 2019, funny enough, most of the foreign FDI was pulled out. That means Namibia now finds itself on its own feet, like you are grown up now, run. You know what I'm trying to say? So when that happened, the economy started to go down because there was no foreign power to depend upon. Basically, as we preach self-sustaining policies and economic liberalization or independence, that shouldn't be the scenario for a country, for any country. Because what happens one day when the foreign companies say we just don't want to invest in your country? So what does that mean? It means there's a gap in finding your own local companies. And I believe one of the contributions to the previous slide was because of GIPF funds, because GIPF could not invest as much outside anymore. There's an interesting discovery I made. You can search it up. When I look at GIPF's 2020 financial statements, it was a nice page 2. You browse to it. You saw a very big, interesting publication speaking about 6.9 billion revenue growth that they have demonstrated. But then I scroll through financial statements, and I don't even see much of this asset that GIPF is talking about. They were just reflecting on the local asset base. Do you know what happened to GIPF in 2020? There was a drop of up to 5 or 6 billion, just lost, wiped out. It came down, I think they had reserves of, 115 billion previously, came down to 107 in 2020. So they lost money actually, but they didn't want to put it in the front page of the financial statements. But what could actually happen if they reflect on the truth? It means that they must develop more local funding and more local, they must be aggressive in putting the money from the foreign listed companies and putting it into the local economy. Why? Because when these things happen, when exogenous factors happen, you always have a local shock that you can fall down to. So Namibia is a saving grace for current local GIPF. They shouldn't question whether going into the property space is a risk for them anymore. They need the local property market. So if we look at the chart once again, on top, it is, if Namibia is on the discussion about the sovereign wealth fund, which is one of the spaces that can boost local economic funding as well. So sovereign wealth funding basically as indigenous people, because those should be the focus areas of a sovereign wealth fund. It should be the San communities, the Himba communities, the affected farmers also that are affected by drought. If we can sort out the least level of inequality in Kavango West or East where poverty is very low, then it means that we're absorbing the shocks for the poorest person whenever something happens. Sovereign wealth fund is not funds that we established just so that we can build the elite club. So that is the understanding that we should have. So that is very important. We need a sovereign wealth fund, but we need an empowerment bill or empowerment fund as well. Empowerment funds look more at the cross-cutting issues like women funding, women business, youth business, young people initiatives, and so on. So also a little bit risk-free and also for guarantees or discount financing as well. Because we can look at the policy of JIPF as a funding body. JIPF not always cover all the spread in the local economy for funding as well. Let's proceed. If you see the two charts below, one of the areas where local funding is required, or an avenue for non-banking sector to thrive, even if we now establish a sovereign wealth fund, I would strongly advise the JIPF not to use its financial books for funding government bonds. You can put the money in a sovereign wealth fund, because as we see the red line there, it is a trend at which government debt will grow. And that is about 2023. And we are talking about the yield on that, or the money that you get on that, will go to foreign entities unless we really intervene. So the sovereign wealth fund can make its money from funding the bonds by handling the bond portfolio for the JIPF and making revenue from it. Instead of leaving to foreign companies, then it means that JIPF at least is de-risking itself from direct funding government bonds. And then next to it is the reserves in Namibia. As you can see, in 2015 we had actually reserve assets higher. In 2017, all the way down. And in 2019, we actually had a minus in our reserves. Reserves means the money that we have. The government has for anything extra. So it basically also motivates or encourages the reason for having a sovereign wealth fund to cater for the needs of other people. There's one area I want to touch on, is the challenges that we have is that there is not being strong competitiveness. Let me go back So if I talk about the challenges, the competitiveness is not, inclusivity of the non-banking sector is not very, very strong. Secondly, there's a concentration of only few companies which are into the thriving space of venture capital or non-bank funding. It still needs to grow. It needs to outgrow its own shoes. It needs to fill gaps in the economic space. It's not inclusive enough because it doesn't target black people. It doesn't target where the majority of the population or the economic expansion will come from. We're talking about 95%, 96%. If we do a Gini coefficient, then we realize that the trend is quite in the space of 80% or 95% that they own 20% but they own 5% of all the income in the country. So actually 90% of all income in the country owned by a mere 5% of the population. So that is the, if you look at average income, their household figures are very staggering. There are households that survive on 2,300 up to 5,000, probably even a year, while there are households that survive on 150,000 to 300,000 income on a year. So if you look at that, it does make a fitting judgment to look at how inclusive or deeply inclusive this non-banking funding should be. If we look at again the challenges of competitiveness, one thing about competitive industry, the financial sector especially, the banking sector, I don't know if I can put that chart here. The banking sector is one of the key contributors for Namibia's switch over. If you look at the last chart, the last chart demonstrates the structure of funding in Namibia. It also, I think, it includes JIPF as well. Namibia had 223 billion in the funding space in the year 2019. Came down to 209 billion in the year 2020. That includes the banks. The banks on average fund about 3.5 billion. I think some of the banks that are very big in these numbers was Spain, it was very big. This Commission must adapt new ways of looking at structural conduct as well as the performance of the uncompetitive practices. Just to conclude, and then using my final slide, is that where can we go in terms of non-bank funding? Other sectors of other economies are looking into the biotech sector, which you can see it's on top in the round circles there. It's 10% of global sovereign wealth funds are going into biotech, software is 22%, fintech is 7%, data is 15%, logistics and warehousing, something Namibia needs for itself to position itself as a strategic or regional hub, mobility 5%, office space 4%, e-commerce 4%, food and beverages 3%, and health. I think people probably in future invest less in food than they want to invest in biotech. So that is where we need to be more innovative and creative. So thank you very much. So
it is enlightening also to us, to me personally. My question is, in Namibia, you experience, we have business ideas, but the problem that we experience is starting up capital. There is a small, what is the impact of, there was a Namibia Credit Guarantee Fund. What was the impact of that? Did it contribute to the economic growth of this country? And how can we speak about empowerment fund, and as well as the sovereign fund and all these things. How will that stimulate the economic growth, in particular for companies that are now emerging or want to start something, in particular in the tourism industry? We get so jealous when we see what is going on in South Africa. There's funds for everything. In Namibia, there's funds for nothing. So where do we fit in? Thank you.
There's no the thing is, the challenge is with politicizing. The political parties are not here to respond. That is the challenge. So let's keep the politics at bay for now. I think we can do that when we can start with that. If you have direct questions for Rodney, I would really appreciate this. No, industry specific.
It's directly to him.
Okay.
Just, I'm not sure if you so quite on this, but Monday I was also at City of Hindu conference on SME strategy and youth funds for businesses. But I just want to ask this procurement act. You know, SMEs, there's people who are funded even by City of Hindu and other funds, but they struggle even to get some tenders through the government because of this procurement act requirements. Just maybe to recommend.
I think that one would be perfect for the CEO of the Investment Promotion Development Board. So let's put that one in the pocket, and then when she comes, we can ask her that, because part of their responsibility is to make sure that.
Economic is already making billions, but Namibia, according to the report that was given to the Parliamentary Committee on Natural Resources, Namibia still has zero. So maybe also to commit to strict policies that are governing international investments that can also now help us, or for Namibia to be able to stand, because currently Namibia is vulnerable to international threats and so on. So maybe just also to add on that one for international investments. Thank you.
Okay, thank you. I think Rodney from his industry knowledge.
Thank you for the platform. My name is Zanet Sali. I'm an entrepreneur in the digital technology industry, currently building a universal omnichannel platform for physical retailers throughout Africa. Mr. Hoaeb, thank you for the great presentation. I'm a stellar follower of your work on social media, and I can attest to your knowledge of the field of economics, within the field of economics rather. I think mine is more a contribution to the EAI as an organization. Those that went before us, our leaders, our forefathers, through their bravado, win us political freedom. It rests upon the people in this room and those behind us and organizations like the EAN to gain us economic freedom. That being said, I think would the Economic Association spearhead practical economic education and financial literacy within the Namibian school curriculum, so that the Namibian child growing up can know what financial instruments are there besides saving and 32-day accounts where they can put their money into. I'm trying to find a Namibian student who, through high school, could take part in the financial instruments that are available on financial markets, stock markets, and so on, and be able to fund their own education and take themselves abroad instead of waiting on NSDP after the government and their parents to fund education. Can there be evidence? We have something like this that we can see economic transformation on the grassroots level. Thank you.
So, listening from the previous speaker, Mr. Richard, on he made a point of the bank service, so to say, this idea of closing some of their institution or their branch or their establishment. This is informed by the advent of technology, the new change in the ecosystem of doing business in the financial sector. So I'm leading this to your presentation because I didn't really hear from you, and I somehow expected this from you. How you link the new advent of, let's say, artificial intelligence, its transformation to change the financial sector. Because if you have a bank, established bank, so to say, they are transforming because of this change. And eventually, the idea, this is what we must all live with. The idea of technology in the financial sector is to get rid of the bank. We will eventually get there. So I'm just trying to link together because you have not centralized that eventuality because we are getting there. So I would, in a way, expect from someone like you. Thank you.
Thank you. That should start that question in response.
Technology. So, let me touch on that question. I think if you guys follow the recent development of Bank Zero in South Africa, so basically Bank Zero is a bank that has zero interest rate, zero bank charges, zero deposit fees, and zero. So basically, Bank Zero is kind of a disruption that is happening because of the change in digital media about banking services. Because now in the world of tech, you don't actually need physical money. I can tell you one thing I can attest to. In a month, the money that I hold in my hands is below even 3,000 cash or liquid cash that I can touch. So that probably builds down to a lot of people. There are people in the world that has not been touched a cent in a month. And this going forward, what does that tell you about the world of transformation of our money? Is that it is losing its value. Physical operated currency is losing its value. But that is why the world of tech and the world of media is very important. So my conversation would touch on to say like, are the banks ready to find those spaces? No, they're not. They are against anything that will cause that competition, direct competition, because they are benefiting from the loopholes or the gaps in the industry. It's for their own gain. And I was saying it about the competitiveness of the structure of banking services in both South Africa and Namibia is that it is selective. If we want to break this, then I think there must be a mandatory legal framework. We cannot just have discussions at the central bank that are nourishing the bellies of banks with repo rates. They're getting repo rates, they're getting relief packages, they're getting order, they're getting order. And how about the average business person? When was the last time that COVID really gave you a relief package? When was the last time you really, for your business, had a relief package? How did you witness it? Did you taste it? Did you see it? Did you see it through a pandemic where we lost 1% or 0.01% of our population died? We're under lockdown, we're under severe job losses, up to 40-something people. Did you really taste the relief package? What does the relief package mean? It is basically a non-financial benefit I'm giving to you. So if we cannot facilitate an environment of non-financial benefits, what about financial benefits? if we are stinging ourselves to stop providing for non-financial benefits, then we are failing miserably either as an enterprise or as a regulator in the economy. So if I cannot give you nothing, then it means I cannot offer you something. If I cannot give you a non-financial benefit or non-financial relief, simply normally relief is saying you don't have to pay next month's bonds or next month's installments. That is a non-financial benefit that I'm giving to you. Did we do it? No, we didn't. How are we expecting financial benefits? Wow. Very and fast can be to happen after 40 days. So, looking at what can facilitate or stimulate that sector is collective investment. So, I would really urge the NAPISA to engage more engage. And thank you, Zenek, for that recognition. Thank you very much. But we want to push more interaction to NAPISA. I would urge NAPISA to establish an office of social engagement. One of the institutions where people only see NAPISA is when they really print the reports on the insurance or whatever, on the cash flows. But the organizations really should invest a little bit more to the PR. One of the reasons why people like myself as Rodney and why Ricardo standing here, you find it very difficult to find employment in the industry or government when you have very radical views about transformation. So basically that means that these entities or SOEs must develop strategies on how non-creative sectors can benefit. That means now people should host more public discussions. Now power should host more public discussions. What happens? Then you're not just stimulating the economy, but you're also finding a way of empowering those, the minds, wise people who can engage with you, where you can develop records. If I go to any institution, please quote numbers, we even take a note of it. If I go to any so much AAA considered Fortune 500, Namibia doesn't go for Fortune 500 considered companies in Namibia. And I asked them, what was your social engagement strategy? They had zero. Financing the energy fund. When last example I had a discussion with a least farmer who's sitting there on the drought pond. What was the social engagement strategy? What did they learn from that exercise? And lastly, how did they implement that change? So that is very important. So social engagement strategies are seen in Namibia as a mere time-wasting exercise. So that is where do your own collective investments, do your own crowdfunding, and then build platforms where you can disseminate money to each other and continue investing in your own initiatives. I will question also, I think that ties also with Francis' question. Francis also, the answer to that is also more collective investments, crowdfunding, venture capital. Even how difficult it is, if we cannot do it, let us attain for our children. There are platforms like Equities, Easy Equities is a South African platform. Very easy, you learn about stocks, you learn about direct investment into SPAR, into ShopRite. You don't just lend. Basically, you can put your money into a link to the FNB account, then it teaches you how to grow to that. Next thing that you know is we can also list local companies with platforms like Easy Equities. You want to list a company, a startup, we can fund Easy Equities. And as an ambiguity, you can say, please fund these companies. If we go to the next comment about educating people on the economy, it's very important as well. We should find a way, we should encourage more research-based interactions. How can I say, government or our government sector in our industrial sectors, you should invest a lot of time in researching, even in your workspaces, and so it helps you develop your consciousness about the industry and also about global exposure. If I go to the first question, sorry, is it first? The name, sorry, I forgot the name. He spoke more about why there's no startups in Namibia but there's startups in South Africa. If I may ask you a tricky question, what do you think is the 60% expenditure of South African budget? You'll be surprised that it's actually grants. And then 70% of that is empowerment or initiatives. So I now got 11%. So to tie those two together, 70% of South Africa is expenditure. South Africa's ability to go out to grants. So that means that in Namibia also, we spend about 8 billion for education. We spend about similar 9 billion on health. And then on the defense about 12 billion per annum. That already tells you that we are already in a depleted state of economic spending. Like we basically we're giving out free money without getting anything into it. How can we make that equation is when we start building competitive sectors for whatever we give freely. So for example, if we have free education, how can we build a competitive education sector? How can we go about welcoming SADC students in Namibia? How can we go about exporting web-based teachings or services into these countries? So we should think about not about direct transfers. The government gets the money and then pumps it directly into a salary. What revenue did you make from it? Nothing almost. So that is why we will always have a contradiction about not having enough current account balance. And then we always want debt. Just to cover for what? Once again, salary bills. So basically, there should be a way of mitigating that growth dilemma. We cannot just have a lot of direct transfers. We cannot afford it. In fact, not that we cannot have it, but we just cannot afford it. So that is basically the scenario. So South Africa's way of finding is that South Africa basically has the up to 7 levels of socio-local sourcing and stability or broad-based economic empowerment. And then 76% of those companies, 76% level of being compliant is level 3 or level 4, which means there's a lot of economic, there's a lot of local sourcing. Up to 76% is local sourcing in South Africa. 76%, that's a huge number. And then ownership is about 29%, which means the black industry, the ownership capacity of our businesses. After 30 years now, in South Africa is only 29%, 30% of the economy. If you look at empowerment pillars, if you progress it up to 35-40% of empowerment, skills development is also booming. The only sectors that are there that are sluggish is tourism, as you mentioned. And tourism also in Namibia, in terms of ownership, it is very poor. In terms of empowerment, it's very poor. And we need more focusing on funding initiatives for tourism, but it needs synergies in the industry itself to come forth and to exploit ways how we can get funding. I was surprised you said, do you know that there's no policy for investment globally? Investment operate on, they are basically like birds that fly around, just with free air basically, or free fuel. You know, birds are very fortunate, they can fly around without having jet fuel. So basically that's how investment is. Investment in any country is only bound by domestic policy. So basically, if I'm in the mining sector, I'm not bound by any international regulations. Only regulations are bound is the country where I'm established. If I come to Namibia, then if the policy framework in that country is not strong enough, then it means I'll have a very nice holiday. I can exploit anything as much as possible. So what did the companies do to constrict this? I think OECD is that at some level of stride in terms of creating investment benchmarks. Countries are self-dependent to develop their own policies for investor coming in mining, or investor coming in marine fishing, or so on. You are jointly independent. But what is most important is that the involvement of ESG, ethical, sustainable, what is the last word? So governance. So ESG means basically, and then second thing I think is social democracies. So what it basically means is people have their own right to look at your ethical practices in investment. They have to look at how sustainable the investment is for the country, and they have to look at your governance strategies that you apply. So ESG has replaced the former frameworks of just someone just coming into the country and doing investments. For example, if Revenue Africa comes in the legal as you mentioned, then we have to look at the compliance to ESG standards. If we look at the non-ethical practices, there is no way that we need American company or Canadian company to tell us what we consider as ethical practice. Because ethical practices are your philosophical views about business. So basically, that is where we need to strengthen our position on ESG methodologies. So and then the second thing is basically the green or adaptive energy or renewable energy methods. If investments and so on do not apply or comply to these standards and are causing more harm to the environment, that is also what we can judge.